Hey there, and welcome to my channel. If you are looking to master the world of forex trading, you've come to the right place. Here we'll break down complex strategies, analyze market trend, and share practical tips to help you trade smarter and more profitably. Whether you're a complete beginner or experienced trader, there is something for everyone. Now let's dive into today's session and take your trading to the next level. This class, our discussion is going to center on SNR levels. In one of our previous videos, we've discussed SNR. We've discussed how support and resistance are formed. We discussed extensively how resistance are formed in the market. And we also, another video, we discussed how support is also formed. Now the concept of SNR, which is still support and resistance. So we are considering the one that is particularly traceable to some specialized trader who are from Malaysia. So actually that's been the name, Malaysian SNR. So they have a special way of viewing the support and resistance, and that is that because they never consider the weak. We can see for every candle you see, there's possibility of that candle carrying a wick. If yes, and the week is a testament to the struggle that occurs between the seller and the buyer. So today we're considering the three SNR levels. Yes, there are three basic SNR level, and we have them as follow. So we have the A level, we have the V level, and we have the gap level. So this gap level, I've spoken so much on it when we discussed about how there are hidden engulfing in gap levels. But I'm going to do a little recap of some of what was said in that video. But let's look at A level. The name A level is suggested by the shape of what we call this level. So this is a typical example of A level. Now, just the same way we discuss how resistance is formed. Now, resistance is formed when we are using the case of, in this case now we are using, this is a black candle, which is a bullish candle, and this is a bearish candle. When you have a bull candle followed immediately by a bear candle, then a resistance is formed immediately. So if all we need to do, if I switch to a line chart now, you discover that what you are going to see here, the shape you are going to see here is going to look typical like the shape of A, capital letter A. So yes, you can see that here. So this is a typical example of A level. So all you have to do, okay. Now, and when you are marking it, you have to mark the first candle. Now, in this case, it's going to be the bullish candle. It's going to be the closing, because in the Malaysian SNR, we only consider the closing of the candle, the opening and the closing. The body closing of the candle is what we consider. So in Malaysian SNR, the wick is not considered, and that is why for you to get it perfectly, if you're having any issues, the first thing you have to do is to switch to line chart, because line chart is going to give you accurate result. So you are going to place your line on the bullish candle. So you can now switch. Yes, you can now see we switch to this. So this is what we call A level. Some call it capital A. So this is a typical example of resistance. So what will happen is when market eventually come back to this space, if it's able to break this zone, break this level, and close above with a body, then one can anticipate the market is going to go up. Let me say that again. If in the future market is able to come to this spot and is able to close with a body above this level, then we are going to anticipate that the market will go higher. But if market is not unable to break it, if market is able to make some rejection along this line, then we can say that the market will further drop down. Okay, let's also look at, you see, this is 4-hour time frame. Let's look at daily. Daily time frame is everywhere. So don't forget, I said the first one must be bullish candle. This is a bullish candle, then followed by a bearish candle. So let's turn to line charts. You see it. This is a typical example of A levels. A level. You see it. So this is A level. A level. A level. This is A level. If you also bring this here, okay, let's look somewhere else. Let's put it here. Of course, it is still going to give you A level. So let's place it here, and let's switch to line charts. So you see it. It still gives us what? A level. So this is typical example of A level. So in Malaysian SNR, we only consider the body closing of the candle. We don't take cognizance of the wick or the shadow, the way you may call it. So this is a typical example of A level. So let's now go to the second one, which is the V level. So the V level is at the support. The V level is always at the support. And of course, if you talk about support, you know, support is formed when the bull candle follow immediately after the bearish candle. This is a bearish candle followed immediately by a bull candle. Then this is support. So support does not necessarily have to be it just doesn't necessarily have to be a point where there's movement of candle over and over and over and over and over and over. There's price action over. No. Support, just two candles like this can give you support. Yes. So all I have to do, don't forget, I said the first candle is the one you consider. So bearish candle in this case. So bear candle is the first one we're going to consider. So I'll place my line at the closing of that candle. Then I'll switch to line chart. You see it? Good. So this is a typical example of what? Of V level. You can see what shape does it give you? It gives us a shape that looks exactly like V. So that is where the name is derived from. V level. This is a typical example of support. So we can continue to move it. You can see this. This is another support, V, shape V. This is another support. This is another support. This is another support. Do you see? This is another support. Of course, this top here, this is A level. You can see it, A level, A level, V level, V level, A level, and A level is another V level. So if you, yes, now you see what happened immediately after the candle was able to break this place. This is a typical example of what we say support becomes resistance. This was initially support, But this candle was able to break above below this and close with the body. Thereafter, the, the prices came along this side and couldn't go beyond this place. Then the market continued, the price continued to drop. So this is A level and V level. Now the third one, the gap level. So all the three are mostly important, yes, but some prefer to trade, both the A level and the V level. But do not forget the gap level is as important. It's part of what I shared in the past. Is the gap level is equally very, very important because a lot of stuff are hidden in the gap level. So the gap level is that space between two candles of the same color. The gap level is the space between two candles of the same color. Look at this particular space here. This is bearish candle, another bearish candle there. The space in between here. This is what we refer to as gap level. And like I said, there's so many things hidden here. If you go down to lower time frame, we're going to see that so many things are hidden inside this. That's why sometimes you discover that, okay, look at what happened here. Exactly at this point, look at that. This is a gap level, right? So when price came down, then it was trying to move up. Then at this particular spot, what happened? Price start dropping. What exactly did price encounter here that made it to drop? Now, let's go. You see it? You see it? What do you see here? Let's look out. Let's turn to line chart. What do you see there? You see what? This is A level. This is a resistance. So when market get to this spot, let's see. Yeah, this is opening of, this is opening of candle. A new day. Yes. So such candle makes this. But you see, immediately after this happened, the price rejected the spot and price keep going down. So all the levels are equally important. So in gap level, just as was shared in the previous video, engulfing candle can be hidden there. And of course, just as we've seen now, that inside gap level, A level can be present, even V level can be present. Depends on what exactly you are looking for. Now, the knowledge of this is going to help you so much more, so that when you are targeting, for instance, now you take a trade from somewhere here and you are targeting, you are targeting the top here. This gap level price will not get there, because some form of forces or resistance are hidden inside the gap level that might be strong enough, depending on what price is doing or the situation of the market at that time, that may be strong to pull the price back to where it's coming. So it is very, very important. Sources of every trader is ability to do multi-time frame analysis. So so far we've covered three SNR levels. These three SNR levels, don't forget, they are also called Malaysian SNR. So if you have heard Malaysian SNR in the past, this is what Malaysian SNR is all about. The first one we've discussed is the A level. And we said the A level is formed at the resistance. So at the resistance. So you have the bull candle followed immediately by the bear candle. So at that point, the closing of the bear candle is where you place your line. So you switch to line chart, and you're going to see, it's going to give you A level. Then for the V level is found at the support. So, and how is support formed? Support is formed when a bull candle follow a bear candle, just as we have it here. This is a bear candle, then this is a bull candle. So the closing of the bear candle is where you put your line. So if I switch now, you will see it. This is a V level. Okay. And last is the gap level. So the gap level is formed in between candle of the same color. The gaps between the candle of the same color. Take note of that. Gap of the same color. So because one candle has to be up and the next candle has to be down. So both of them has to be like this, not side by side. So it has to be one up, one down. So the gap in between